videos. It should be up on YouTube, should be up at the virtual trading floor. If someone could check and give me some feedback on the quality on the YouTube, I would appreciate that. I'm working with the tech team here to really try to improve the quality of all of my broadcasts. My issue is that I'm just, I'm at my dad's house, I'm in the city, I'm at the office, I'm on, trading from all these different computers. I think the one that I'm having problems with is my new computer, which I have in the city. So I'm going to work with the tech team next time I'm in the city to try to get that better. Because I know I did one video and I actually saw I saw it on YouTube, and it was not. I was very unhappy with the quality. So I'm going to work on improving that for everybody, and I appreciate everybody who bears with me as I work through tech issues. With that said, let's get started here. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Thank you, Robert and Aribaba. I'm going to work with them on that also. Position disclosure here. I got stopped out of WFRD, but I added pins. What a day today. What a day today was. Let's hop into it. Totally bonkers. We had a pretty solid gap down this morning, in excess of 1% for all of our indices. How did we close? SPYs closed flat. If you're one of those people who just turns on the news at the end of the day, you'd be like, oh, it must have been a boring day on Wall Street. S&P closed flat. The Q's here up 1.6%. Massive intraday move. And the IWM up 0.75%. Not massive, but really solid off of the low of the day, especially considering the early relative weakness that we had in the IWM that was concerning to me up until around 10 a.m. or so. Let's dive into it. Guys, this is a huge win for the Bulls today. This is a huge win for the Bulls. We discussed in the morning meeting. We kind of said, it's not looking too likely, but in the event that they buy this market up today, it would be a huge win for the Bulls, and it is. It's a massive win for the Bulls. We closed green today after gapping down huge. The Bears had everything on their side to absolutely demolish us today, and they didn't. On top of that, we closed on highs, and there was a massive amount of bullish option flow that was coming. Maybe not a massive amount, but it seemed like a significant increase on bull flow in the options market, that large institutional flow that seems to be so telling. It seemed like there was a real big pickup on that today. So, Bears had everything on their side, right? We gapped below our key level of 380 for the SPYs and 170 for the IWM. It was a gap that was in excess of 1%, which typically leads to a gap and go to the downside this year. And it was a market that was not extended to the downside, right? We've seen this market on many occasions in the year 2022 be so extended to the downside that, it's tricky to get that downside follow through for the Bears. And this was not it at all. We're not extended. We're gapping down big. We're losing key levels. The dollar was up massive today. I mean, this morning especially, just another reason to just totally wreck us. Yield curve inversion getting worse this morning, and that's what really caused us to trade down pre-market. I did point to a couple things that I thought were positive pre-market. The Chinese PMI number, the tariffs might get pulled off. Yeah, oil being down, I almost don't even know how to interpret this here. I could see both sides of the argument. For the most part, we wanted oil to be down, right? Because that potentially means less inflation, and that's better. But I think that the reason why oil is coming down here is because of recession fears, and recession fears are certainly not good. If you look at the market, you can make an argument for sure that the market multiple has gotten a lot cheaper. I mean, it certainly has. That's what this entire bear market has been about. It's been about just PE multiples correcting. But the big question has been, are we going to lose the E, right? Are we going to lose the denominator? Because if that's true, then multiples aren't that cheap, and we can certainly continue to go down a lot more. So this oil thing, it's like, yeah, you know, oil is getting totally crushed here. That's going to be good for inflation, but if it's getting crushed because everybody thinks we're going into a recession, well, that could actually be the cause of the next leg down. So anyway, you know, for the most part, Bears had every reason to wreck us today. And the fact that they couldn't, I think, is telling. We still have, and this is what I was paying attention to on the downside, and it never got breached, Thursday's low. Thursday's low we had discussed maybe could be the building of a wedge. And technically, a wedge is bearish. Let's certainly keep that in mind. But what I keep saying is it's less bearish than the alternative. The alternative is that we just, this is the next, you know, lower high from the market, and we just work our way down, and if the measured move is double the last move, so this measured move would be, you know, let's just call it 415 down to, let's just call it 360, a doubling of that off of this pivot. So what did I just say? 415 down to 360, that's a $55 move. So you're looking for like a $55 move off of, you know, let's just call it 390. You know, we're going down to 340 bucks here in the spies. Like, that's the alternative. So the fact that we build out a wedge here, which again is still technically bearish, is better because at least you've got an opportunity for the bulls to break the wedge to the upside, even if it's a lower probability move. And that's what I started calling for on Thursday here, and I think we kind of caught that low really well. Friday, you know, was a little bit tricky. It's, you know, Friday going into a holiday trading session, but for the most part we closed above the level, so it was positive. And then this gap down this morning, I was like, oh, well, you know, it was just a holiday trading session on Friday. It was a low volume day. They closed us on highs, and, you know, I don't want to get too excited by Friday's close. Today's close has me a little bit more excited. Today felt like a very bullish day. Like I'm saying, the market had every reason to bring us lower, and it didn't. And whenever the market should do something and fails to, it's always potentially a signal on the opposite side. So let's see if we can actually get some follow through. I also wouldn't be surprised to see continued chop here for like this week as we kind of await more information, because we've got this big CPI number that's coming up, I believe, on the 13th. We've got earnings season for July that's going to be starting soon. So maybe the market kind of goes into a wait-and-see mode. But I would argue that today was extremely bullish. And what led it was these semiconductors. So we discussed, my concern was the market, because I liked the idea of AMD, Micron, and to a slightly lesser degree, NVIDIA to the long side. These have been market leaders, along with the IWM has been, like the index I think has been the leader. But we were looking at day 6 to the downside and a gap down below yesterday's low. So what we discussed for AMD and NVIDIA was the idea of like an RDR, Red Dog Reversal, or Oldensmith Overthrow, whatever you guys want to call it, of a buyback through yesterday's low. And this trade just worked out, you know, tremendously well. I mean, we're still super extended here, even with this good close. AMD's at 75 bucks, the ADMA's at like $79. You definitely could have another $3 of upside here. So I hope that some of you guys who are involved in AMD and caught this early, because we recognized this relative strength very early this morning. So I hope that people who caught this early are swinging a little bit to see what kind of follow through that we can get. So that AMD worked fantastically well, NVIDIA worked fantastically well, Micron gave multiple opportunities here to get stock. The first trade that we discussed in the morning meeting was just being long versus yesterday's low because of the type of candle. It's a higher volume hammer with a decent degree of extension, especially given a price gapping down to like 52 bucks, because you're going long versus, you know, 51.40. So you got, you know, somewhere between 60 and $1 worth of risk depending on how you execute it. And if you just get a snapback to the ADMA, that risk reward is fantastic, and that's exactly what happened. This is the exact setup, except kind of on a daily chart here that I discussed in my candlestick class like 2 weeks ago, just on a daily, and that worked out really well. If you missed the opening long, one of you guys had a fantastic call out off of this pivot low. And why do you want to go after Micron here at this point, after it's already rallied from $2 to $54.50? Why is it worth it to go long off this pivot low here, 53.78, because of the relative strength. The relative strength was there. And I remember saying this morning when I was on the radio, and then I just had another hectically busy day today, and I apologize I couldn't get on during the day, but you guys had Pat totally leading you to victory. What I kept talking about in the morning meeting today was I was just like, man, there are just so many stocks that are out there right now that just look so good, but this market looks so bad. Like, if we could just get some market cooperation, some of these names look fantastic, including the semiconductors, including XBI. You know, XBI has been a constant on the radar. The daily chart looks fantastic off the open. The third bar of the day here, the market's going green for XBI. Look how bad the SPYs look on the third bar of the day. Look how bad the IWM looks on the third bar of the day. Qs maybe a little bit better, but honestly, even Qs here, third bar of the day, inside 5 and down, this is not looking good. But XBI, semiconductors, recognizing that relative strength, that's just where we want to focus on. And the growth names. Some of those growth names, you know, Brandt called out Roblox very early as a buy versus this low in the first 5 minutes of the day. And then this thing was green. The stuff that went green first, if we can just get a little bit of market help, these things could be massive trades. That's what I was saying. And we kind of called the oversold bounce here, but that was the low for the Qs, but it wasn't the low for the IWM, and it wasn't low for the SPYs. So you easily could have gone long off of like this 15-minute low here because we kind of communicated it specifically with the NASDAQ, and then the NASDAQ broke up. If you did that and you were also focused on relative strength, you never got shaken out when the market made new lows. Because the SPYs obviously made new lows here at 10 a.m. at 9:55. The IWM made new lows here. But everything that we were talking about that had relative strength, AMD did not, Micron did not, XBI did not, Roblox did not, any of the other growth stocks that are similar to Roblox did not. So it's all about name selection here. All about name selection, all about being involved in the right stocks and recognizing that relative strength. And then once we got the market to actually cooperate, I mean, look how trash the SPYs looked all day. We had a little bit of a 15-minute correction that occurred at 10:35, and then we almost made new lows on the SPYs. Right? Look at the 15-minute chart. 10:35, right? This little 15-minute correction on this tail, and then right back down. Things are just not looking good in the SPYs. And I remember trying to figure out why, right? Because it's like, all right, my Qs, I'm not going to say that they look fantastic, but they're certainly looking much better than the SPYs are here at 11 o'clock. Qs gave this great move at 10:35, but they pulled back a little bit more than I wanted them to. I was a bit concerned. At like 10:45 that the Qs looked okay, but the SPYs looked like trash, and that the Qs were going to end up failing because we've seen that happen so many times. But the thing that gave me a little bit more encouragement was the IWM post 10:10. The IWM traded really bad in the beginning of the day, and then it was specifically on this candle here at 10:15 that the IWM changed. And this is such an important index to me. Look at the 10:15 5-minute candle for the IWM versus the SPYs, and even versus the Qs that were relatively strong, right? So what just happened at 10:10, we got a downside extension bounce via a Maribozu. And I remember noting that IWM Maribozu was on low volume. The Q1 was better volume. The SPYs a little bit better volume, but still not great. But again, go back to the class I did 2 weeks ago for some of the people who are new. What did we say that these Maribozus do? They make the market innocent again in this case if it's a positive Maribozu. But I got to recognize that it's within the confines of downtrending, weak market. It's just snapping back to the ADMA. So we easily could lose this low. As a matter of fact, it's probably likely that we'll lose this low. But on a very small time frame, this kind of puts the market into innocent category, right? And then I'm like, all right, you look at the 10:15 bar on the SPYs, and it's an inside 5, but it's like all the way back down. And then even the Qs, not great, right? Pulling back maybe a little bit more than you want it to. But the IWM, the way that this candle held in at 10:15, kind of made me think, all right, there's hope for this market. And then we broke higher, and things are looking good. And then the IWM is creating this base. So it reached a point here just after 11 where I'm like, oh my god, this buys look terrible. That could cause these Qs to fail. The Qs just pull back more than they should, right? They should not break the 1035 Maribozu low, but they did. But the IWM was kind of basing here and was holding in significantly better. And then, honestly, the final real change, like, for the most part here, this snapback in the IWM is just a bearish snapback. The snapback in the SPYs here is just a bearish snapback. The Qs are better for sure. They had completed a full gap fill. But here you ran into gap fill resistance, and then all of a sudden the market's looking great. The thing that really changed this market, and it's a weird time of the day, was this 10:40 a.m. candle. Also not on huge volume here for the IWM, but it just broke us to the upside out of these consolidations, where at that point here at 11:40, I'm looking at this market, and I'm like, all right, I don't think that we're really going to break down, because we should have. The SPY should have, and we just didn't. And we ended up having a fantastic rally that really only started midday, which is a little bit unusual, but then lasted throughout the day, and it was being confirmed by consistent option flow, and then we closed on highs. And at the end of the day here, SPYs are only up 0.1%. IWM is only up 0.75%. But I would say that this was an extremely bullish day. We got back above 380. We got back above 170. We got back above those key levels for the indices. And probably more importantly, today was a day where the bears had every opportunity to destroy us, to make it be one of these down 3% days, and we closed positive, and I think that that's huge. So let's see what kind of follow through we can potentially get off of today. Maybe I'm being overly optimistic and overly bullish. We are still in a downtrend. That downtrend hasn't broken. We are just still in equilibrium here. You know, the space between this 8 and 21 EMA on the daily chart, we could easily just, you know, be faking me out, and next thing you know, we're breaking back below these lows. But I think that today is a day to take notice of. I think that after today, on a small to intermediate swing time frame, I would probably rather be long than short. And that, you know, program could easily flip its switch very quickly. We've seen that happen many times. But I really think that today was a day to take notice of. And, you know, again, as a team, I think we just crushed it. You know, we recognized the opening uncertainty, but we recognized not to chase shorts because of the degree of the gap down. And I'll be honest, I was real scared here after like 10-15 minutes after the open. It's like, oh my god, the gap down's so big, I'm in this situation again, I can't chase these shorts because of how big we're gapping down, and the downside momentum is coming in, the market's not giving me the technical signal to be able to put my shorts on. I feel like I'm sitting here naked with long swings on, you know, still from last week or whatever, and we're looking terrible. And at one point I did short the IWM, right? I bought TZA, and I bought that kind of off of this bear flag, and I did a little bit early. The ADMA hadn't even caught up yet. I usually don't like to do that, but I was just like, wow, if we just have this continued downside momentum, they're not even going to let me get my shorts. So I was like, you know what, I would rather just short early and get shaken out or get stopped out, and just lose money on it, but at least I got that on the books if this downside momentum here just continues, because, again, we've got every reason to go lower. I would rather just have that on the books and lose money on it and have it as an insurance policy than just be totally naked to the long side and just, you know, get caught. What's the expression? Like, naked when the tide pulls out or something? Swimming naked with the tide pulls out? I don't know. I'm bad at expressions. But that's what I was worried about. So I hit that IWM. I covered a little bit kind of at lows. I was not really, you know, and I did it by being long TZA. I was really not trying to sell much of this at all. I sold a little bit, just take some risk off the table and kind of cover it a little bit. And I was like, everything else I'm just holding because I just need it as an insurance policy. So I lost money. I easily could have been break even on this TZA if I was less greedy, if you will. But I needed this to hedge myself out because I was so worried about the market at 9:45 this morning. And I got stopped. And I remember saying, like, I hope I lose money in this. Because if I lose money in this, it means I'm going to be making a lot of money in other places. And that's exactly what happened. Labu ended up kind of being my best here. You know, just continuing to get paid on this thing. I'm really trading the XBI off of it. But this XBI broke through resistance 1. Resistance 2 I'm looking for is the space between 85 and 86. Resistance 3 is this $90 to $91 area. And then resistance 4 is like 97. I am looking to hold some all the way up to a hypothetical $97 in the XBI. That would be my real reach target for it. This thing's continuing to pay me. I loaded up in the right spots here at lows in May and June and managed to barely not get stopped out. I think it was on this day, June 16th. This thing was so close to making me have to pull the trigger here. But I didn't have to get out. See this low here, 62.13. This low here is 62.16. So close to pulling the trigger on having to sell. But I love how this thing looked even in early June. The relative strength here compared to the market, you can really see it, and I think the data's on my side for this XBI. So that one paid really well. Shout out to Pat. Maybe some money in Pinterest got me back in. Had to pay up a little bit. I bought like 18.20 or so. When the market improved, he called this thing out. I think we might have saw a bullish option flow kind of come in at about the same time. So I bought some pins here, paid up versus lows, and just got totally paid on that one. And that's my new position on the day, and everything else was just position management, and it all worked out pretty well. So it's a good start to the week for me, and I hope it was a good start to the week for you guys. And I think we did a great job navigating today as a team. We were super on point. So that's all I got. Happy to answer any questions that you guys have, or look at any names that you guys want me to look at. Josh saying like DNA looks really good. Yeah, it's a good wake-up candle here. A lot of these growth stocks today just had the most beaten up, destroyed names had the most amount of strength today. This Roblox was just a monster today. So many of these types of names. Yet, XLE, maybe a little bit of a tail here. Close right around that $70. Not great. XLP snapped back pretty nicely, huh? I didn't see that. XLU, oof. Crazy day today. And the interesting thing is that we were able to be, I know a lot of us here on the team, myself included, for good reason. We've had our eyes on the dollar like a hawk, right? It's just been so important. And we haven't seen what happened today, I feel like, at any other point here in the last couple of months, where the dollar could be up as big as it is, and the equity market acts as strong as it did. So that's a notable difference. And I'm still nervous about this dollar. I really want to see the dollar pull back. But if the dollar can pull back, I mean, the way this market was, it could lead to a big rally. And what you guys got to remember, whether you're bearish or bullish on this market, it doesn't matter. You got to remember where sentiment is and where positioning is on this market. It's like non-existent, right? So what that sets you up for, combined with the illiquidity of the market, is that you get one decent CPI number, one decent piece of information, or honestly even just relative strength that continues to come in the way it did, or just people having to park money somewhere because the oil got weaker or whatever. The potential of these short squeeze rallies in this market, these bear market rallies in this market, can be so huge. I mean, I remember commenting on and noting, particularly in the NASDAQ, these moves are psycho. These moves are insane because there's no liquidity. Like the way that we just rip up and rip down and rip up and rip like these moves intraday, 5-minute candles in the NASDAQ are so big because there's so much less liquidity than we're used to in this market, that if you don't have that, if that liquidity is that low and people are hedged and no one's in the market and sentiment's as bearish as it is, and again, I'm not saying you can't be bearish. As a matter of fact, you probably should be bearish. We're in a downtrend. But what I am saying is, don't be stubborn bearish. Because if something can trigger, whether it's technical or it's a piece of news, if something can really trigger when it, like these short squeezes or a bear market rally or whatever it is with the lack of liquidity, it could be massive. We could be back to 315 here in the Qs in the blink of an eye. We really could be, or even above it. We could be back to this. We could be back to 330 in the Qs, and everybody will just be looking at the market going, "Oh my God, what happened?" Right? Don't forget about what happened in the second half of March. because that's exactly what happened here. This rally, that second half of March, which is a positioning, sentiment, and short squeeze rally that ripped us from 320 up to 370 for the Qs in a matter of a couple of weeks. You could see $50 of upside here in the exact same way in a relatively short period of time if something triggers it properly. So that's what I got for you guys. UVixie had an inside and down by only 3 cents. Interesting. UVixie is such a garbage product. From Jerry Hall, do I see a rebound in oil? A lot of smart people are still really bullish on oil. I don't see... So possibly one of the things that hit this oil today was the Citi analyst came out and said that in the recession we're looking at $65 a barrel oil again. And I think we traded back down to $100 a barrel today. I don't see $65 a barrel oil happening anytime in the near future. I really don't. At the same time, I think that so many people chase these energy stocks that people just ran into problems here in this pullback. And we recognized it early as a team, right? We recognized it on this day. So I just think that a lot of people are this is just another area of the market here where, once again, people are caught flat-footed and they need to just kind of wipe people out a bit, whether it's, if you're trading crude directly or you're trading the XLE stocks. So we could see a continuation of a reverberation lower here. Like, I, in theory, want to start to build into some of these energy stocks. I had WFRD on Friday, but I got chicken out of it. I thought I had the most fantastic close in this WFRD on Friday. I thought I had great stock here. And I had to manage my risk. I had to get stopped out of it because this thing just broke down further. It was just absolutely bonkers, absolutely incredible. So, do I see a rebound in oil? Yes, I do. But I would be very cautious to just, jump in and put your bids in right away, because I think that people are caught wrong-footed on this and are trapped, and that could lead to further puking. Or maybe today was it. Maybe the way that we tailed back down in the XLE below $70, but closed okay. Maybe that's it. So I think it's worth keeping an eye on, but I would just be, I like the bullish thesis, but I think you just got to be a bit patient and really wait for your technical execution. Yeah, Airbnb was another one that just had a phenomenal day today. It actually broke the inside day to the downside before breaking up. With this strength came in, this is another one, higher low here. Like most of these growth stocks put in higher lows. What was the market doing at 10:05? Lower lows. A lot of these stocks are making higher lows. And I remember thinking, wow, if I could just get a little market help on some of these names. And this was another one that really took off. Really took off. Thanks, Robert. What else, guys? Anybody else have any questions, names that they want me to go over, anything I can help with? Or are we wrapping it up a little early for the day and everybody's got a little 4th of July hangover? I know I'm tired today. I stayed up past my bedtime watching fireworks last night. I was all ready to go to bed at 9 o'clock, and then I was like, oh yeah, fireworks. Next thing you know, I'm up till 10:30. Disaster. Way past my bedtime. UPS for tomorrow. $185 is clearly level, so let's pay attention to this. Pay attention to this tomorrow. Did frog, is that a real tail in that frog? Did it close weak like that? No, it didn't. It closed up at 23, not a real tail. Yeah, so good call on that frog this morning. Like I said in the morning meeting, you want this to be the pivot low that leads to continuation. That's what it's looking like. You haven't gotten the new high yet, but you got fantastic follow through on this. So hopefully you're able to sneak into some stock, below $22 today, early. This is another one. Relative strength was your signal. Stock trade's a little thin for me. I don't like stocks that have like gaps on 5-minute charts, and it's got like a couple. It's a little bit thin for me. But this is another one here where you recognize that relative strength early. Look, this thing went green at 9:45. Look what the market was doing. There's another one. If you can just get a little market help, it could be a monster, right? And then it eventually got that. And again, I got a false print here. Closed at 23. So you want this to be a higher low that falls through to a higher high at this point. The trade was probably today, though. Probably don't want to be chasing this, through 23.50 or 23.70 tomorrow. You kind of want to already have it. AMD phenomenal. You know, we talked about it already. Gave the Oldensmith overthrow trade today, so this was on our morning meeting game plan for a long back through yesterday's low. It worked really well. It closed really well. It was relatively strong early. I like it. I'm looking for follow through here. Target 1 would probably be somewhere between like $77.50 and $78 for me. And target number 2, because 21 is going to continue to decline, would probably be like $83. And then from there, you want to see if this retracement becomes a reversal. Also, keep in mind that $80 was a support level that got lost, so that $80 could act as resistance. So, you know, maybe long, sell some between $77.50 and $78. So maybe a little bit more in front of $80. Sell a little bit more like $83, and then hold 10 to 25% of your core position that you're swinging, just in case the retracement becomes a full-on reversal, which is significantly lower probability, but that's reversals are always lower probability, right? I thought Alibaba was great today. I didn't trade it again, but this was another one. You know, we talked about the positive China news, and the market seemed like it was ignoring it pre-market, and then Alibaba was trading really well early, and this was coming with higher lows when the market was breaking down and closed really well. I am a fan of this Alibaba. I don't have it in my trading account, but I've got it as like an investment because I like it that much, in like my long-term personal account. And I average down on that, so I'm happy with it. JD, I'm a fan of also. The JD candle is not fantastic. I mean, it's not bad with that tail, but I was expecting to type up JD and see it like close to $68. That didn't happen today. All right, gang. I guess let's wrap it up. Great day today. Great day for the Bulls. Definitely a W. Let's see if we get that follow through tomorrow. And once again, just fantastic job here on the team. You know, recognizing that rotation early, focusing on the relatively strong stocks and getting the appropriate follow through. So have a great night, everybody. I'll see you in the morning.